Welcome to Allstar Finance. My name's John Waters and thank you for joining me on this informative video series. My aim is to educate you with your day-to-day finances, keeping you financially fit. Throughout each video in the series, we'll look at several real-life financial scenarios where we've solved actual financial problems that one of our clients have experienced. We'll open your eyes up to many different strategies that may help you maintain financial stability. I know you'll enjoy what you see and learn throughout the series. At the end of the video, you'll have the opportunity to click on the button to obtain a free consultation with me to see how I can further improve your financial situation. In today's video, I'm going to talk about a loan I recently completed with one of our clients. This one was a refinance and the consolidation of debt. Their current situation was basically their existing home loan was owing around $375,000 at 4.25% with current payments of $1,845 per month. They also had a couple of credit cards that they'd got up to close to their limits and were struggling to pay off quickly, so they wished to consolidate and put it into the home loan and look at a strategy of paying extra towards that home loan to pay off these credit cards a lot quicker than what they currently were. So they have one credit card at owing $8,500 with a 15.99% interest rate. Minimum payment being $255 per month. Now, you may or may not know already, but by paying minimum payments to a credit card, you'll find that it will take many years to pay off quickly. So my advice is, if you're not looking to consolidate your home loans, is to put any extra payments that you can afford towards your credit card and pay off always the highest debt with the highest interest rate first before you look to pay extra off your home loans. These people also had another credit card which was owing $11,500 at 13.99% with a minimum payment of $345 per month. So total payments per month were $2,445 or a weekly of $564 for these people. They, when considering moving into another lender or looking to refinance and consolidate debt, is to also look at what does it cost to move. So some of the fees that are applicable, there's a discharge fee or mortgage discharge fee, which our Lands Title Office charges of $160. The bank that they were leaving wanted to charge a $350 admin discharge fee to attend the refinance settlement. Then a new bank wanted to register the mortgage, which was another $160 charged by the Lands Title Office. And then the new bank to attend the settlement of the refinance was charging $100. So therefore, total fees to be considered are $770. Basically, the scenario would look like them needing to borrow $396,000. So they would have one payment based at a 3.64% interest rate, which is $1,809 per month or $418 a week. So it's considerably less than what they were currently paying. Now, these clients, though, were happy to pay more and basically pay around $565 per week, which will then save them over the term of the loan around $105,000, and it will also save them 11 years off the term of the 30-year loan, obviously potentially paying it off within 18 years. Please note, a bit of a disclaimer here, that rates do move up and down. So saying what I've just said, it is working on the fact that rates don't change. Now, obviously, we know they do, so it's important to keep in touch with myself if rates do go up, and I can give you the new amounts that are required to maintain that strategy of paying off the loan quickly. Now we need to look at what we're actually saving these clients per year in interest by consolidating and refinancing their home loan and credit cards. Now, to do this, we're going to look at a refinance comparative tool, and what I'm going to do is I'm just going to put the numbers all in, and this should calculate exactly what savings on interest we're going to receive. So just bear with me while I do this. So I'm going to put $375 as their current mortgage at 4.25%. So this is their existing position. $8,500 is one of their credit cards, and that one was at 15.99%. And then their last credit card, $11,500 at 13.99%. We also need to consider the costs to move. So there was $350 for the exiting bank to attend the settlement for the refinance, so they were charging $350 to do that. Then there is $160 to register the mortgage and $160 to discharge the mortgage as government lands title fee. So we'll call that $160 by 2, so $320. Then there's the $100 fee for the new bank to attend the settlement as a settlement fee. So I'll just calculate that numbers there. So that should add all the debt together plus the fees to move. So that comes to $395,770. So if we call it $396,000, as previously discussed, and we're able to achieve a rate at 3.64%, punch that one in there, and then we hit calculate, and this should give us the figures that we're after. So we look down here, year one, with their current position, with all their credit cards and home loans, they're currently paying $18,905.50 in interest. With the proposal, by consolidating the debt and putting it all into one loan at 3.64%, we are now getting $14,414 as interest per year. So that's a saving of $4,491.10 per annum. So in the first year, they're saving all the cost to move. So it's a little bit of a no-brainer, I would suggest, to look at moving to this new lender. Over the 3-year period, they're saving $13,473.30, and over the 5-year period, they're saving $22,455.50. So that's a considerable savings. I think it's better coming in your hand than the bank's. It could be a good holiday or a new car there. So obviously in this scenario, it's helped the clients out immensely. Thank you for joining us on the video today. I hope you are getting a lot out of the video series. Now it's time to see how I can help you with your finances. So from here, click on the button below to request your free consultation. And finally, if you know someone who could benefit from seeing this video, feel free to forward it to them.